All right, Mr. Flag, since you're back from your doctor's appointment, it's important for you to know that we had already hit this level on the S&P once and bounced, just like we did that Dow up there. But this is a weekly chart of that S&P. And if you close one more full week below it, so it's not a bear trend reversal yet. However, as I've told you, Ken Flag, that when the 10-week moving average crosses over the 20-week, then we'll probably come down here, as you know, to the 50-week moving average, which is down here right around this 1231 handle on the S&P. Should we break that, Ken Flag, the next pit stop, if it wanted to come all the way back down here to the 200-day and the 100-day moving average, which is a bullish right here, because even though that we've had the bull rally, because it's been a bull, long-term bull rally, Mr. Flag, and the thing about it is that in that bull rally, we had bull rally year 1, bull rally year 2, and it's the third count with the fourth count reversal as far as the public model goes. And the thing about it is that when we called a short up here on a weekly, you can see that you were at 87.92%. Here, you dropped 83% DS, public indicator. This blue line, if you get 4 weeks below it, it's no longer considered a long-term bull rally trend. It starts to turn into a bear reversal trend. Ken Flag, there's a difference between a bull reversal to make higher highs. So the bull, when the bull was working, when it pulled back, you made higher highs. Bull, we pulled back, we shorted here in the beginning of the year, but we made a higher high. And that, once again, in our analysis on our website, it clearly points this all out ahead of the fact. Just like right now, it's real time. It's midday. It's 10:12 a.m. Pacific Standard Time. It's 6:15, 2011, Mr. Flag. And yesterday's weekly, this is a weekly bar. It's an options expiration. It's a June options expiration. Now, that's what the weekly looks like. On a shorter term level, using a daily chart, that 200-day moving average is going to be coming into play. And good thing about learning these public indicators is where they're going to make their reaction. Their reaction is that we are going to be oversold on the S&P in the shorter term. And what's going to happen is either we're going to bounce here, Mr. Flag, but yep. You can see that from the original daily reversal, we keep making a series of lower lows on the S&P. And this low right here was 1265.64, and today's low was 1263.54. It's still a lower low within the top reversal. And that because you had that big up day, that was a daily doji. In technical analysis, they're confirmed when they popped up and off to the races with the China news the other day. And bam, buying across the board. But you've taken that bar out, yesterday's daily bar, by at least 1 3/4 more in length than the upside was almost, it seems like. That's what we're going to be monitoring. The thing about it is, if it doesn't bounce hard here off support, what will end up happening, remember that within the original reversal, we are now entering oversold conditions on the S&P. As far as short term, what will end up happening, MMTs, is that this 200-day moving average, if you sell through it, you're going to see lots of stops get triggered. And the problem is that if that happens, you're going to be short longer rather than buying the bull bounce. Okay? And this is 1180 handles right over here. When I get it right over here, you got a 1223 handle, and you start getting right slightly below that. This is where that breakout happened right here. That's that 1252 handle on the S&P. However, the S&P is short-term oversold areas of where bounces can start to happen from the deep reversal that stockmarketfunding.com called right here at that high. Right before that high happened was to get short. And if anybody's in denial of it, please go to the website and look under S&P charts Go and look up the dates, look up the time. It's all live. It's not after the fact. If you're looking for after the fact, well, hey, go do with that. That doesn't make you money. That does not prepare you after the fact. No, 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 Mr. Flag. And the thing about it is, these moving averages are all crossing down, Mr. Flag. So, short term, just like when you get overbought, you can stay overbought for an extended period of time, but you can also stay oversold for an extended period of time. And the key psychological public level of the 200-day simple moving average is coming into play at an oversold condition. And every bottom has a process in all indexes, and MMTs will become quite familiar with it. That's the daily analysis midday. Once again, let's go back over here and tell you the kind of haircut. The S&P 500 is getting a haircut of 21.9 handles. You're right there. You're 14 handles from breaking those lows of around 1251. And when you start getting down here on this weekly chart, this 50-week moving average is ultimately going to be in play right here. Right here. And let's take a look at it and see what number that is. That's right here. This is this pink data down here. Let me open it up a little bit. That's 1231.41 handles. Mr. Flag, set alarms for that 50-week moving average, Mr. Flag. The 200-week and 100-week is way down here. If it sells through that one, and the daily, if you break the 200-day, then you're going to see that 50-week moving average come into play. Ken Flag, do you have any questions, Mr. Flag,
Nope.
about the S&P? Huh?
Nope.
But you know what happens when the blue line crosses over the red line, don't you?
Yeah.
Right?
They sure do.
But you also know, Mr. Flag, from being in the school for a period of time, that you are entering what we call an oversold area in the S&P, right, Mr. Flag?
Yes.
It's very important to understand that. Let's get ready to rumble.
Sure is.
Yes, it is, sir. And let us not forget that the S&P is at this critical area right across here. It's right here where this breakout happened. This is about right where we are right now. That's where the bottom of that is. This is a weekly sell, and it will be final on Friday. Short-term oversold S&P 500. Certain kinds of bottoms are putting in certain ways with price action, Mr. Flag.